Hello and welcome to another daily market update by Market Intel. Today we want to take a look at the XRP chart, one of the most popular charts, and the market is in a correction and we are on our way into a potential support or trading area. So let's take a look at the chart. Let's go. So we are on our website, dailymarketupdate.com. From here, we can navigate directly to our cryptocurrencies section. If you're interested in additional updates, like for XRP, for Kronos, BTC, every single day for certain cryptos, check out our website. Link is in the description. It's completely for free and you get additional updates every single day. Today, we want to take a look at Ripple XRP rather, and we'll take a look at the weekly chart. We hide the text, and yeah, here on the weekly time frame, you can clearly see that the market is still in an uptrend. Expectations are for this fifth wave to still go higher, possibly towards $5, $6. We need actually a low in place locally before we can determine where exactly that wave 5 should go to. We will do that over the coming weeks, maybe over the coming months, depending on how long it takes to form a local low. You see that the market is, at the time of recording this video, still holding above this critical $1.96 level. This is a previous breakout point. It's the 2021 high, and we might hold above it. It's not absolutely needed, probably, and that's the preferred interpretation, is we go down a little lower than that, and even might only be for a short period of time. In a minute, I'll show you on our smaller time frame the relevant levels on the 4-hour chart so that you get a good understanding of which levels need to hold to keep the overall bullish expectation alive. As I said, wave 5 should take us probably to $5 to $6, but that can extend depending on how the subwave structures develop, and it will always depend on where this pullback finishes, right? Then afterwards, the next rally can be calculated and the targets. So at the moment, this is just a label which can move. Yeah, we don't have a target box there, and we're currently holding above that 196 level. Might break below it. It wouldn't be a great deal, but it's important to understand that what is happening here is most likely the fifth wave of a very large 5-wave move. You can see that in 2017-18, this price top that formed in the $3.40 area, that was likely a third wave. And then the market formed this fourth wave triangle, which bottomed end of last year. And we're now in, or middle of last year, end of last year, and we're now in this fifth wave up. So that is the last move up here, probably off the cycle. Now, within that fifth wave I've just shown you, we should get a 5-wave pattern. Elliott waves, especially trending moves, are moving in 5-wave patterns. Current thesis is that a 5-wave move unfolded between July last year and January this year, and this is labeled as a 5-wave move in magenta wave 1 of that larger degree 5-wave move. We're now most likely in a wave 2 pullback. Support $1.53, $1.02, 72 cents. Expectations here would be that we go into this region. That requires a little bit further evidence, like for example a break below those previous swing lows in the $1.80 area. Alternatively, but we only assign that a probability of 30%. Alternatively, the low is already in, but the market would need to show us some evidence on the smaller time frame to suggest that the uptrend is unfolding. This here is, there's nothing impulsive to the upside so far. Movements to the upside are only corrective, and in a wave 2 we're labeling here a complex WXY structure, and we're watching the $1.53 level next. With a probability of 70%, the price should go into this area. Then we will watch for a reaction in that area. Of course, if the market shows an impulse to the upside a little earlier than that, we will adjust. We'll have to adjust. That would then be our alternative scenario. But we assign only a 30% probability for a direct upside breakout. This would be further confirmed with a break above the critical $3.39 level here. Break above it could indicate we've actually started the third wave, and that would be wave 3 in magenta of an even larger degree wave 5 that I've just shown you here on the larger time frame. So that means we're now in the wave 2, and we need the low in the wave 2 to be able to calculate the target for a third wave, which means in the short term some more downside pressure is expected. But as you can also see on the chart, it looks like that most of this correction is already done, at least time wise, because we've seen the wave W, we've seen the wave X, and we seem to be in the middle of that Y wave to the downside as per this analysis. So that's the update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure that you register on our website. It's completely for free. Thank you very much. Bye-bye.